June was a record month for junk bonds in Europe. 22.5 billion euros issued. It's a frenzy, says Bloomberg. Insatiable appetite for risk right now. Could not agree more. One big reason for the optimism is this 3.5-year cycle in junk bond spreads. This is the U.S. we're looking at. It's triple C's against treasuries, so it's the worst of the worst against the best of the best. End of 2024 was a low in this cycle dating back to 2007. Remember, narrow spreads here represent complacency. Widening spreads almost always end in some kind of credit crisis. We're now in a rising phase until the fall of 2026, and investors' growing risk aversion will have impacts not just on credit markets, but on equities, currencies, precious metals. We track all of these markets in our monthly global market perspective. Gold prices are in the midst of a record-setting run. How much further can it go? The answer is a lot further, at least if ETF holdings are any guide. Total ounces of gold held by exchange-traded funds were right around 90 million troy ounces through the last week in June. These gold holdings historically trend with spot prices. That's why right now is so interesting. ETF holdings are lower today than they were in 2020, yet spot gold is up some 75%. Bottom line, investors still seem to be underestimating gold's upside potential. This is the normal course of events for markets that are mid-trend. If gold prices are about to blow off to the upside, and that's a distinct possibility here, then ETF holdings should be on their way to a new record. Gold is not a market you want to sleep on. It's difficult to overstate just how much investors hate the U.S. dollar right now. Exhibit number 1, institutional money in dollar futures, largest net short position in 15 years. Exhibit number 2, Bank of America Fund Manager Survey. Net 31% of managers underweight the US dollar. That's a 20-year extreme. The pessimism is frankly understandable. Dollar index saw its worst first half of the year since 1973. Wave analysis is uniquely able to identify turns in the market. These bearish extremes signal that the dollar is near a significant low. The wave structure agrees here. We're tracking a nearly complete ABC decline since 2022. We're preparing for a dollar rally. And by the way, if you go back to that low in 1973, this chart doesn't show it, but the dollar bottomed on July 2nd, rallied 21% in 6 months, recovered its entire decline by January of 1974. History may be about to repeat. First half of 2025 is in the books. Who would have guessed that European stocks would outperform the US by the widest margin on record? Europe is, quote, difficult to ignore. That's according to Bloomberg. Here, however, is another chart that no one should ignore, but many are. Stock 600 in terms of gold. Essentially, its nominal stock price is corrected for currency debasement. This is what European equities would look like if they were measured in a stable benchmark. Stocks have lost real value since 2021. This index actually peaked decades ago. We've shown longer versions in the past. But the new highs in the nominal indexes are primarily due to a depreciating currency. If you want our up-to-the-minute forecast on global markets, go to elliottwave.com.